Good morning, trading world. It is November 3rd, 2022, and this is my pre-market outlook and technical analysis for trading the markets. Let me start off by translating what the Fed said in his speech yesterday. The translation goes, "I came to bring the pain, and I don't know when it will stop." According to the Fed Watch tool, we are 41 days, 5 hours, 16 minutes, and 37 seconds away from the next FOMC meet. And we already have a 52.8% probability of hiking another 75 to 100 basis points. The whole focus of the speech was to get any kind of tell of what the terminal rate might be. And for those of you who don't know, the terminal rate is just the rate at which the Fed can start to reverse policy, either stop hiking, but either pause or cut rates. And in the speech, there was no sign of that being any closer. Now, here we are, 14 points lower, and the VIX hasn't even raised its head. Don't expect for the VIX to get excited because we just spent the month piling up open interest at these levels and lower for the last month or better. The only good news is that the market doesn't move in a straight line. So if you miss the short before the Fed, there will be another opportunity Friday. Also, don't forget about the all-important jobless claims report this morning. With that, let's get to the key levels of the day. All right, here we are with our levels of the day. Starting on the support side, we have our Jack support at 372 to the 371 area. Queen support 370 to the 369 area. And then King support 368 all the way down to the 364 area. On the resistance side, we have our Jack resistance at 375 to the 376 area. Our Queen resistance 377 to the 381 area. And then King resistance 382 to the 386 area. The main thesis for today is bullish, closing above the 374.87 with a projected target high of between 375 and 382. The alternate thesis is bearish, closing above the 374.87 with a projected target low of between 374 and 364. The current major channel we are in is 379 down to 364, with the next major channel above being 379 up to 397. We do have harmony between the technical side, which is bullish, and the quant side, which is also bullish. There is some leftover order flow way up the ladder. Will we turn around and enough to bounce between today and tomorrow to go get it? In my opinion, I see several false starts that may not catch hold until tomorrow. So we could pretty much chop in a range, trying to get started up, falling back down, and falling even lower overnight before popping up tomorrow. So that brings us into today's scenario. All right, here we are with our first and most probable scenario, which is going to be our expanded range day structure. We could have an initial pop higher, find resistance, chop back and forth before getting a midday or late day fade, and still try to spike back, but spike back up and yet still close pretty much nowhere on the day, or almost where we were, back to where we were pre-market. So that's the expanded range day structure. All right, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area, find midday chop around either the Queen or King resistance before going back down with the same amount of energy or force we went up with in the first part of the day. I do want to mention the vice versa alert, and the vice versa alert just gives us pause to watch for the opposite in this scenario, which we would get a continued push lower, find midday chop around either the possible Queen or King support area, and then push higher in the second half of the day with the same amount of force we came down with earlier in the day. So that is the vice versa alert on the rounded reversal day type structure. The last scenario is going to be our trend day down. We open gap down and start with a pop back toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We find midday chop around either the possible Queen or King support area. And then, not all the time, but a lot of the times, we do get or start the second half of the day with a head fake, looking to continue the main trend of the morning. And then at some point, we may get a rally into the close. So that's our trend day down day type structure. I hope that this helps because we're in for a decent amount of pain and to continue this downtrend for a bit. And like always, your most important job as a trader is to protect the capital that you already have. We do that by knowing and understanding the risk that we have in each position and managing that risk in accordance to our account size. I hope this helps. If I didn't say it before, if you missed out on the short pre-FOMC, there should be another chance Friday to set up for a multi-day swing short. All right. Wishing you a positive trading day. Let's go out and make it a great one.